Is this just another bull trap like one of the violent bear market rallies from 2022? I'm inclined to say no for a few reasons, but of course, we shouldn't become complacent here. One of the easiest comparisons we can make is what's going on with inflation and Fed policy. In 2022, inflation was trending higher before the market bottomed, and the Fed was shrinking the balance sheet. In 2026, inflation is already trending lower, and the Fed is expanding the balance sheet. There are many other things that make me a bit more confident that this could be more similar to the May lockout rally of 2025 after the tariff tantrum, rather than the lower high that happened in late March underneath the daily 200 SMA. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 20 plus additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame talking about candle structure and location, as we always do. In terms of structure last week, solid green-bodied bar with a very impressive close from the buyers at the highs of the weekly range. Very little upper wick, very little lower wick, not much to read into there from a psychological perspective, so buyers are clearly in control structurally. If we think about location bar to bar wise, a very obvious higher low and a very obvious higher high. Complete candle close outside of and above the previous week's range, the range before that, the range before that, and just at the upper bound of even the week prior to that. So I wouldn't necessarily call it a bullish engulfer, but it did take back a substantial amount of the drawdown that we've seen recently. So location certainly strikes me as bullish here. The other things that strike me as bullish are just notably that there was very little market reaction at the bottom end of the overhead supply. So in theory, if we were scouting that weekly lower high, it ideally wouldn't have been anywhere above that 675 area. And we can clearly see the close above that. We can see the close above the weekly 20 SMA. That's the orange line. You can see in the lower wick of the weekly bar as well that we've supported perfectly off of the weekly 50 SMA. So all of these very subtle nuances start to stack up as slightly more bullish data points. Now, I'm not going to deny the fact that markets do tend to overshoot. So if the market pulls back here, is that still going to technically qualify as a weekly lower high? Absolutely. But rather than looking at this through the lens of a developing downtrend, I would be more along the lines of saying, okay, where's the weekly higher low going to form? And ideally, that's going to be anywhere over this 653 level that we've been talking about, alongside the weekly 50 SMA, which will act as confluence in the coming weeks worth of trade. So if we pull back here, it's less about saying the market's going to crash and burn and go to zero, but rather, where is the weekly higher low that keeps the trend in the upward direction? Where's the weekly higher low that confirms this as a monthly higher low, the mole thesis as we call it, and then how can we ultimately navigate back up to all-time highs? Now, the caveat here, of course, is if the daily trend remains down and we break this 653, then of course we're no longer really looking for the optimistic outcome, and instead, as we described in last week's episode of the weekly watch list video, we're probably looking at an overshoot of the 610 area and more along the lines of a move to potentially come in and close this gap at some point in the future. Once again, let's not get overly bearish here. We just talked about how candle structure, location, moving average references are all bullish. Let's also break out the Fibonacci's here. Let's come in from the all-time high to the most local low. You can clearly see a candle close over the Fib 61.8. Notice that the 38.2, if the market pulls back and tries to set that higher low on the weekly chart, would be over the 653 prior set of lows from over here. We can also come in with the anchored VWAPs, which is a favorite of ours here. Let's check in and just making the note that, of course, we've closed over the entirety of the stack. So as I think about the weekly chart, I mean, a very impressive move in the upward direction. We know a lot of that, of course, has to do with the gap up on the Wednesday overnight session, or I should say Tuesday overnight headed into Wednesday. But just a total lack of response from the sellers to really ideally find that weekly lower high. And for some of those reasons on the higher time frame, I don't necessarily think it's really worth maintaining an overly bearish stance here. Let's go ahead and grab a volume profile, and let's just hit it with this. Notice that we are at the high volume node. This is the point of control as it relates to all price action in this box here. So it wouldn't be unreasonable that a pullback comes in. I just want to be very clear, although I'm changing my tone to saying, okay, the weekly chart never really materialized for a lower high. We never really got this segment of price action here before a washout capitulation, right? I was thinking that we might be able to get that underneath that 675, ideally underneath 653. We never really got that. And instead, it's more like we're here, right? And we're trying to navigate back up towards the all-time high. So yes, we might experience some degree of a pullback off of the high volume node, just like we experienced a pullback in here. But I don't think that the base case should be saying, oh my goodness, this is like 2022, and we're going to wash out to a brand new lower low. Again, if 653 fails, I might have to change my tone again, and we'll play competition of the timeframes. But for now, a very substantial recovery here on the weekly timescale. Let's drop this thing down to a daily chart. Let's firstly evaluate this week's expected move. If you're not familiar with this study, it's the gray shaded area right here. And you can check out the video tutorial in the top right hand corner. If we're contained by the upper bound, the number's at 691.65, and that of course implies a higher high in the daily trend count. If we're contained by the lower bound, it's 667.27, and I would honestly call that a higher low in the daily trend count, right? This is certainly a higher low as it relates to the major low. And even if you wanted to use this as a soft higher low, remember we've been saying, especially in the pre-market preps, right, that we never really achieved an hourly downtrend there. So at best, we could call this a daily soft higher low. Even from there, the lower bound of the expected move is still a higher low. Notice also that the expected move low is in the midpoint of the gap range, the gap being this yellow shaded area here, or I should say the window in between the two yellow lines. A partial gap fill would also be bullish, right? Because what does that tell us about the confidence and strength of sellers, right? This is, or should be, a thin structure retracement, and if we support off the lower bound of the expected move, which is a partial gap close, it just tells us that sellers are unable to rotate literally through zero structure. There's no previous price structure here to contend with, right? So hypothetically, it should be an easy move for the sellers to achieve this if we don't get that and support the lower bound. Once again, partial gap close is bullish. Notice also that the daily 200 SMA over the course of the week may ultimately just meet us there at the 667.27 for that daily higher low. So the base case here is really looking for some degree of a pullback that starts to interact with the top of the gap. And can we suggest a higher low partial gap fill reversal that then looks something along these lines? So a lot of little zigzags in there. What does it mean? Something over the daily 200 SMA is ideal. I would probably start really getting back on board the long side if we could recover over the Wednesday low of day. And then I would also just inherently have to be bullish over the weekly area of potential overhead supply, which was here at 676, 675 we'd been using as well if you want to cherry pick some of these wicks in here. If we get back above that, then again, it seems to me that we've set a daily higher low and we're ultimately seeking some sort of continuation back up towards the all-time high at some point. This is if the market pulls back, right? If the market pulls back deeper than the daily 200 SMA, I also wouldn't be too concerned about that. If we go for a full gap fill reversal, something that looks like this, as long as we're over that weekly 653 mark, I don't think we should maintain an overly bearish stance. This inherently would still be a daily higher low, would it not? So in my view, a lot of impressive recovery efforts happening here with the gap up on the Wednesday session. It, dramatically changed the calculus of this chart. I will just take the liberty to zoom out. We mentioned it in the intro, but I'll just do it one more time here on the intro, or in the video with us. Rather than looking for this lower high to persistently set up this big washout capitulation, it seems to me that we have more of the circumstances of this, right? The deal to make a deal. Let's think about this. I've brought it up a couple times now. The deal to make a deal with China on trade was a framework for future deals. It wasn't actually a deal itself, right? And if we compare that to where we're at now, we have ceasefire negotiations taking place. It's not officially the end of the war, so to speak, right? Both sides have continued to say like, hey, this doesn't mark the end, right? But yet the market's trying to look through that. It's conditions to potentially get better in the future. And that's very similar to what we had with the deal to make a deal. So in that sense, this gap, in my view, is very similar to what happened after the tariff tantrum rather than the lower high before it, where, perhaps if we got a quick little look above and fail on the 200 and stayed below, then yeah, I would have been looking for the equal low washout, that 610 capitulation that we had talked about prior. But things have changed dramatically, and I know we've talked about it in the pre-market preps, and I'll continue to talk about it here in the weekend videos. If you're just bearish for the sake of being bearish because you want to be right about the market going down, I think you're somewhat ignoring the data points and the dramatic, again, improvement of the supporting evidence. I mean, not only did we reclaim the daily 50 on the gap up, but we actually tested below it on that Wednesday session, clearly found buyers, and then closed higher on the week over the overhead supply. Once again, if we had stronger sellers, you're probably just fading hard on that Wednesday gap up, exactly like a Palantir did, right? Exactly like an IGV software sector did. And you're just not getting that in the broad market. And we are also seeing really substantial leadership start to emerge. So we'll get into all that nitty gritty, but let's keep it focused here for just a second. Let's get on down into our hourly chart. There we go. Our hourly chart, always one of my favorite things to say. What do we see here? Certainly a bullish development in the sense that you got this breakout on that Thursday session, and then you couldn't even take out the breakout consolidation lows on Friday's pullback. Now, it doesn't mean that we're never going lower than that level. It just speaks to the nature of participants in the market. If you're thinking that you don't want to hold risk over the weekend and you're already long from, say, down here, say you're long from over here, you caught the breakout, fantastic. But if you don't want to hold risk over the weekend, what are you doing? You're selling into the afternoon on Friday. And Friday's lows, once again, could not take out that consolidation low and unlock thin structure. We'll see this on market profile, but there's actually some single prints in there. They couldn't close. So I'm taking that as a bullish data point, which means in the hourly trend count, if we have lows, you could close the singles still, and that would be fine. I would still qualify that as an hourly high or low and ultimately seek trend continuation like this. Now, if the market actually breaks down through those singles, fails the breakout point here at 676.25, also the weekly overhead supply we were just looking at off to the left, then great. I mean, all things considered, we've got a head and shoulders. And as a matter of fact, this would actually give us a better entry as it relates to risk reward on the downside, right? If we could actually get this, if you'd like to trade that short, be my guest underneath the 671.20 down here towards the gap close area at 659.50, that's completely fine. With respect to the lower bound of the expected move and the daily 200 SMA, you could take that trade, but I would be much more interested in trying to find the location in here where, say we actually break down, flip the hourly trend to down, where is the daily high or low via hourly downtrend? Remember, the 1 hour trend needs to flip down to qualify this as a daily firm high or low. And then how can we get back on the long side on a recovery effort back over the Wednesday low, and then even more so back over this 676.25. So in my view, that's the better pathing outcome to actually look for. Once again, if the market overshoots all of this stuff and comes down like this, and suddenly we've got a bear flag back down below the gap close level, yeah, I'm probably not going to be as bullish. I would probably be neutral here, noting that a quick look below and fail maybe sets up what? Inverted head and shoulders down here. Now you have a weekly higher low, right? That's a possibility. And, again, to get involved in that, if you'd like, you could probably start by the Brigade bolt happening in here, right? That's ultimately how it happens. You catch that down leg, that's fine. Risk reward to the downside. But then when we get here, I'm sort of neutralizing, looking at the supporting evidence. This has to be done in real time, right? This is literally what we do every single day with the group. But do we have compelling evidence that this is a bullish location for a weekly high or low? I'll give you one of the most obvious things to pay attention to. If this does pull back, if the market comes in here, and the VIX can remain suppressed, like volatility is not accelerating as the market pulls back, that would be a sort of, in my opinion, a dead giveaway to say, okay, it's probably more so worth looking for that higher low, right? Rather than continuing to look for, oh, no, market's going to break down. Now, if the market pulls back and VIX explodes again in the upward direction, I'm talking about high 20s, right? Just south of 30 perhaps, and then we start seeing bear flag down here on an elevated VIX, yeah, I mean, maybe we lose the weekly higher low thesis, and we're really starting to trade back down here. But let's take that one step at a time. For now, the compelling evidence seems to me to suggest to say, okay, this is a major improvement. Let's hit this quickly with intraday anchored VWAPs here. And what I want to illustrate is just the fact that we've retaken the all-time high anchored VWAP, right? We sort of saw that a little bit on the weekly chart, but it becomes even more obvious here on the hourly. You could also see that as and if the market were to find this head and shoulders reversal, come into this gap close area, this is the Monday ceasefire talk originally sort of offered up from the Trump administration. This is when Iran acknowledges it here. Notice that both of these anchored VWAPs will be right in that neighborhood for a daily and weekly high or low. As long as we're above that, anybody who's bought any of this location, or I should say, well, yeah, I mean, technically, anybody who's bought anything, any price underneath that 660 area, they're still feeling fine. That's potentially an add point to them, noting that they've just seen a huge higher high in the trend position. So in my view, this is a pretty constructive look. Again, I don't know about loading the boat long up here. A little bit of exposure getting on wouldn't be the worst thing in the world in case this does turn into a lockout, just like what we experienced again back here, noting that the market sort of made this rally, pulled back once, and then you never really got a deep pullback again. This gap remains unfilled for what that's worth, right? So a little bit of exposure at the highs, maybe not the worst thing in the world, but would I be all in here? Probably not. I would like to see some kind of a pullback. It would definitely offer better risk reward. as it relates to positioning. But if the market does just do this, then obviously you have opportunity cost if you're not exposed to the market to some degree. So best outcome is a pullback we could better manage risk off of. An okay outcome is sort of sideways up here that then continues in the upward direction. And not really great outcome would be closing the gap all the way, finding acceptance here with deteriorating supporting evidence. Maybe we get something that looks like this, but I would prescribe at this point at least lower odds of that as of right now. If the supporting evidence body changes, we will have to change and adapt with that. The last thing I'll say here on the daily chart before we move into supporting evidence is just that these 2 days, really light volume there as the market extended out to a new high after the follow through day. Wednesday was technically a follow through day. It's not my favorite type of follow through day. I would have really liked to see a solid green bar there. It does technically count being expansion of range from this prior session, but intraday, it's not like the buyers actually followed through, right? And then when the buyers did follow through, it was on some fairly light volume. So I'm just making note of that. And once again, pointing out that the risk reward profile is much better if we could find higher lows down here versus kind of being forced to buy the lockout rally up here. You do expose yourself to a little bit of pullback risk. I shouldn't even say a little bit of pullback risk. This is a fairly sizable gap, right? And just kind of keep those things in mind as we're navigating these levels. All right. That's what we've got. If the market just continues to rip to the upside and it's just, some upper levels beyond the upper edge of the weekly expected move, this was a pretty substantial rejection high. Let's see that on the hourly as we scroll back here. See how this was just immediately sold off from. So that's 693.35. All-time high beyond that is up there at 697.85. That is extended through the upper bound of the expected move, but hey, never say never in this current market environment. Let's check in on the market internals. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. Another reason to maybe be a little bit more skeptical of the continuation higher right out of the gates is just look at the volume flows on the Thursday, Friday session. Pretty lackluster here. The advanced decline line didn't really stick substantial trend higher zone activity. I mean, we'll give it to the market on Wednesday, obviously, right? Then look at your cumulative build on the tick down here, even negative on that Friday. Now, I know we closed lower, but I mean, we still stayed in the upper distribution of that Thursday consolidation, the flag into the afternoon. So I would tend to think that you probably would have had the inverse of this build, something that looked like that. And it's just not the case. Now, are these outright bearish internals? Oh my God, the market's going to crash and burn? Absolutely not. Let's take a look over at the market profile. If you're not familiar with market profile, check out the video tutorial in the top right-hand corner. And I just really want to highlight one more time that single print segment in here from the Thursday session. If we had a stronger market, as soon as we dipped a toe into it, I mean, this market should have been seeking like a heat seeker, maybe too soon, a heat seeker straight to the closure of the single prints, and it just didn't do that, right? There's no volume at price in here. Should have been like an easy little walk in the park, a cakewalk, if you will, for those sellers, and it just didn't happen. Again, not to discredit the fact that it can't happen in the future. It's just the types of participants headed into the weekend. Nobody really seems overly fearful of, downside risk here. And if anything, people are just content to hold their long positions. That's what this seems like to me. I just want to zoom in a little bit further. A little bit of lack of material excess on the high and low of the Friday session. So we'll keep that in the back of our heads as well. Let's go back on over to the platform. Let's take a quick glance over through our nasty NASDAQ, the QQQs, bumping on up to a weekly timescale chart, throwing on the right moving averages and a clean drawing set. Perfect. Beautiful. Let's take a look. What do we see? So very similar, obviously, in terms of structure and location. We've got a solid green bodied bar. We've got a close over the weekly 20, not the daily, and perfect support off of the weekly. There we go. 50 SMA in blue there. You could certainly see that the market did not hesitate at all underneath the overhead supply. And as a matter of fact, it actually rotated into the previous overhead supply as well from off on this side. So all things considered, a very powerful recovery effort with no real attempt from sellers to put the sort of, party pooper hat on and say, no, this is still going to be a downtrend. Now, of course, do we still have to acknowledge the threat of a potential equal-ish lower high? Yeah, I'd say that's still certainly there. And coming from the lowest low in the trend count, it is something that's going to be, in the calculus at, or I should say to some degree, but the supporting evidence body, as we'll continue to go through, just doesn't really align aggressively with continued major downside. Let's hit it with a fib just like we did in the S&P 500. Good close over the fib 61.8. Let's go ahead and grab our anchored view apps for the Qs weekly over the entirety of the stack there again. And then let's just hit it with the volume profile. And as we can see, we actually closed over the high volume node at the top end of this range. I mean, we could make the same comparison. Instead of looking for this little bear flag on the weekly and then continuation, it's more like what we have here, gap and go, deal to make a deal. And let's see if we can continue forward to the daily and see what we got going on here. QQQ. As it relates to the weekly expected move, the upper bound is going to be, so it's this gray shaded area, right? The upper bound of the weekly expected move on the Qs is going to be at 623.89. That's a higher high in the trend count. Notice also it's a break over the top end of this balance range. That's just inherently bullish. And then the lower bound is going to be at 598.25, better than the soft higher low and better than the firm higher low. So all things considered, expected move does align for those bulls. If we take a look at what it's confluence with, you've got your daily 200 SMA, just like the S&P 500, as well as the 50 SMA. So in the S&P, we know that we gapped right to the 50 rather than through the 50. Look at how much cleaner the support is there on Wednesday off of the 50 simple. And just, again, it's like, if we had stronger sellers here gapping up, you would think that the market should at least attempt to close this gap more so. And then on the Thursday session, we actually did not get expansion of range to the upside like the S&P. So, okay, as we're testing that low, don't you think that sellers would make a stronger attempt to get into the gap again? And it just didn't happen. So I don't want to be overly bullish at the tippity top of the move. Again, in a trend count, we talked a lot about this on the Wednesday midweek market update, right? You don't want to flip to being bullish all in the market here at the highest high. Generally, the highest high just allows us now to look for the higher low, right? And then when and if we can hook and spot that higher low, that is where we have the better risk reward back in the upward direction. So I think the data points, I probably sound like a broken record here, have meaningfully changed. And now it's just about finding the appropriate risk reward entry to participate in the new green shoots, if you will, of the uptrend. As it relates to the full gap close level, I do have a little bit of a sort of concession to make on the bear side. If we close the gap, that would be falling back down underneath this area here, right? So something that looks all the way like this, that could be potentially a problem if the market then rejects the 200 SMA on any attempted rallies from there. So yes, on first thought, it will, my take at least will be, I'm looking for the higher low, but I would be very quick to change my tone if the rally attempt fails at the 200, something that looks like that perhaps, pretend that's 200 SMA. And then we start consolidating here, right? Why? Once again, because not only 200 SMA rejection, but think of it from a structural perspective, all of this turns back into overhead supply. Anybody who's a buyer from in here who is like, okay, finally, maybe they held on to positions as this drew down, they're back to break even, they're feeling confident. If they lose that again, are they going to be willing to hold on for a second go around? Usually, it's not the way it works, right? The more times that those positions go back to red, the more likely it is that they get closed out, right? So in my view, the 595 midpoint of the gap is actually the critical area that I would prefer the market tried to hold on to. If we overshoot, I'll give the market the benefit of the doubt, but I'll be very quick to change my tone if the market yields this outcome that I've just drawn in there. Let's go ahead and hit this on the hourly chart. Let's come in here. Let's take a look. All the same conversation points, not much to totally rehash. Again, if you're a stronger seller, you're probably looking at these highs and thinking to yourself, what a great spot to reject. In which case, I would kind of agree with you. You could totally see a little bit of a trend reversal here. Let's say left head, right shoulder, get a pullback towards the 50 SMA, towards the 200 SMA. I would love to see something that looks like this. Better risk reward entry is here. Reclaim of Wednesday's low. I would look to go back up to the equal high. That would be my preferred base case pathing right there. If we overshoot this, as we just talked about, and do something that closes the full gap, you do still have your daily 20 SMA as we just talked about. My base case would probably be something along these lines to pair back up with that upside path, considering this a daily and a weekly at the same time, high or low, correct? Same thing. However, once again, with caveat, so I'm just going to come in here with a dotted line. If this, so at this point right here, pretend that you're 200 SMA, look at this drawing, this thing's evolving, huh? If that rejects at the 200, and this is the same thing I just drew on the daily chart, right? That's where I change my tone back to saying, okay, not really the bullish continuation that I ideally thought we would have been offered here on the upside. Let's go ahead and grab a anchored VWAP set here, intraday anchored VWAPs. There we go. Once again, just pointing out that we're above the entirety of the stack as and if time passes on, time will always pass on, we will be sort of confluence there at this 588.80, which is the gap close level and just the line in the sand really for that ideal higher low, right? And that's what we've got there. I realized we did not hit the S&P with a fib from the low up to the high. Let's get a click. So let's do this on the NASDAQ. We have a 38.2, which would be right in the right neighborhood of a daily high or low. Definitely 61.8 is at the line in the sand. Like no ifs, ands, or buts about it. Underneath 580.75 is dangerous, right back to the bear side. And we'll quickly go back over to the spiders. I'm apologizing in advance for jumping around like this, but it's just always better to have the data point rather than just omit it. So your 38.2 is kind of right in the neighborhood of the 200. So it's still going to yield a higher low. And the 61.8 is not quite good confluence with this. I would be concerned. Just like I would not lean into the 61.8 being a line in the sand. I'd say underneath 653 kind of gets a little bit dicey there. You're falling apart underneath a major low anchored VWAP. You're losing this consolidation low from the Tuesday session. That would be problematic. So I would not lean into the 61.8 on that particular view. Switching gears back to the NASDAQ though, mentally, let's take a look at the market internals. Same conversation, really not that strong on the internals look for Thursday and Friday. Same thing over here out of the tick. Let's jump on over to the market profile and let's just take a closer glance at what this actually looks like. I suppose we'll just focus on the Wednesday, Thursday, Friday. Same conversation. There's your single prints, unable to close, lack of material excess, poor low on the low of day. So hypothetically, if that needs to be repaired, and I also like that the point of control is left elevated in the session up here. If we start taking out value area and spending time on Monday underneath value area low, then I would look for a short underneath the Friday low to pull back and at least target the closure of the single prints here towards that 25,120, which may kick off a stronger pullback. Just noting, if this is a 2-day range that we broke out of on Friday, this is a look above and fail, right? What should the target ultimately be? The bottom end of the range, which starts to knock on, of course, the gap that exists down below. So I can see the path for a pullback to develop. I just once again want to be pretty clear about the way that the tone has shifted here in terms of looking for a higher low if the market pulls back and rather not maintaining an overly bearish stance. This is the S&P, but again, here's the NASDAQ. It's the same thing, right? Look above and fail, first target bottom end of the range, and then there's your higher low. Right. So let's continue along. Let's take a peek over at the Rusty Russell via the IWM. Let's start on that weekly chart as we typically do. Thanks, as always, for letting me set that up. Here we are. Solid green-bodied bar in terms of candle structure, just like the S&P and the NASDAQ. Really strong stuff here. All the same sort of bells and whistles. Strong higher low, strong higher high, almost a bullish engulfer in some sense. Much stronger close over the weekly 20 SMA and a clear recapture as well of the previous overhead supply. This is bullish no matter how you cut it. You could still sort of be stubborn and saying, nope, it's going to be head and shoulders and, a break of the neckline gets you bearish. I'd say that's fine, but let's wait until we're at least here. Let's wait until we at least have some kind of a, backside attempt on the daily chart to reject the overhead supply. We just don't even have that yet. So one step at a time. For now, this is a bullish looking weekly reversal off the 50. Let's take a peek at our Fibonacci from the top down to the bottom. Close over the 61.8, bullish data point there. Let's hit it with our anchored VWAPs for small caps over the entirety of the stack. And we'll start anchoring one to the very bottom in here as the weeks wear on. It's a little early right now and we're seeing it on the hourly chart anyways. Let's drop in let's go to studies and let's hit it with the volume profile. And as we could see, if this is the high volume node, certainly broke out meaningfully above that, and we closed right on this high volume node. So through the low volume void, if we do pull back, once again, the main data point, or at least the idea for me at least, is to say, can we get the weekly high or low for trend continuation in the upward direction? Let's take a look at the daily, excuse me, and see what else we can glean here. A lot of the same, right? So expected move offers a higher high and a higher low. The upper bound is at 267.85. The lower bound is at 254.75. This as well is a partial gap fill reversal if we're contained by the lower bound to the downside. Notably as well, this is just a balance range. So if we could come all the way into here, that's like the picture perfect place for a higher low, and the trend would remain constructive in the upward direction. We have talked a lot on the channel about how much relative strength small caps have had, and not that I expected them to be a leader out of the low, but they kind of have acted somewhat in that way. They did not go out to new lows over here, or I should say substantial new lows over here. There was really not much action under the 200 SMA, and you've reclaimed the entirety of the moving average stack here. So that's bullish. We can clearly see the same weekly overhead supply that we were just talking about. If you're a stronger seller on Wednesday's gap up, you're ideally fishing for this to close the gap and remain heavy with a rejection of everything here. If you're an old buyer, let's think about this in terms of new inventory, old inventory. If you're old inventory and you're like, oh geez, thank goodness I'm finally able to get out of this thing for break even, and I don't want the headache anymore, you're potentially a seller up here. If we have enough sellers, what should happen? The gap should close and we should just be back down here and, then sorting it out from the gap fill reversal place. That's just not what happened. So all of these unfilled gaps tell us about the types of participants in the market. And once again, we don't really have this big bearish wave washing over the market where everybody's like, oh my goodness, sell into this big move up. If you want to see what that looks like, just look at Palantir. And of course, we'll talk about this in the core list of companies. This is what it looks like when it's, oh my goodness, sell the heck out of this thing. This is like a gift from the market gods. Get out of this thing at a higher price, sell it all. This is what it looks like, right? Look at the volume coming in here. Look at just how much of a washout it is. Look at the bearish engulfer. I mean, if you've been watching the intraday performance, you know that we're down like, what, 20% in here? Yeah, almost 20% to the dead lows. It's 21%. That's such a substantial rout over the span of 3 days on a stock that at first was trying to develop a little bit of a weekly higher low. So if the broad market looked like this, I would be shouting from the rooftops like, oh my God, like forget about it. This is like as bearish as it gets. And oh my goodness, it's like, do not buy this thing at all. But the market so far has responded in kind and, in my view, looks pretty darn good. And the supporting evidence starts to literally support that as well. Let's come in here with the hourly chart just to take a closer look. You know, again, pullback could start via some sort of a head and shoulders in here. That is A-OK. Remember that the risk reward, apologies for the funky Thinkorswim zoom. Remember, the risk reward is hypothetically better at the gap fill reversal area. If you could start looking for risk reward back in the upward direction, that's far superior than like risk and reward running into previous resistance over here. So that's certainly something of note. Now, it doesn't mean that a look below and fail on the gap isn't going to get me interested on the long side. Of course it is, especially if that look below and fail just tags ever so slightly the daily 50 SMA here on the small cap. So I'll be looking out for that. Let's hit this with the anchored VWAP stack, the same thing that we had on the Qs and the S&P. We could just see a lot of the same. We're over the entirety of the stack. Let's hit it with the Fibonacci from the low up to the high. If we pull back, Fib 38.2 is spot on the money, as they say, right at the gap fill reversal level, which of course I like. Let's jump on into our internals for the Russell side. And same old song and dance. You could fire up your Aerosmith on a lovely Saturday session. A lot of the same, right? Just not really the strongest follow through on that Friday session. I'll also point out here, and we could probably see this on, well, of course we'll see it on the market profile. So let's just go there now. As we look at the RTY, you can actually see that we did close the single prints, right? So rather than the buyers remaining firmly in control like the S&P and the NASDAQ, you tested those singles, closed them all the way, but then you started to bounce. So what does that particular insight tell me about the market? These are probably short-term traders who are getting involved on the Russell, right? The OTF traders, the other time frame as we call them. Jim Dalton famously coined that, right? The OTF, they don't care about a single print closure over here. They don't care about a previous day high, a previous day low. This is like short-term traders who care about this stuff. So to see the market bouncing off of that, it just tells me that short-term traders are in control of the market. And what do we know about short-term traders? I mean, if we take this low out, it's probably going to be seen as insecure and a stop run is triggered. And, you know, it's just maybe lower from there to initiate the pullback as shorter term inventory gets shaken out. Then the OTF possibly steps in at the lower prices for a gap fill reversal. That would make logical sense in my view. So that's a quick look through, I shouldn't even say quick, but that is a look through the broad market index products. Let's go ahead and reset this and let's start to take a look through our supporting evidence body as it relates to sectors. So who was leading, who was losing, and where was the weight? Industrials lead this week, up 4.88%, followed by Mag 7, really impressive stuff there, 4.69%. We've got the XLY, XLK also up more than 4% and outpacing the index, right? So that is bullish by itself. At the very bottom of the barrel, we've got IGV. Software cannot get out of its own way. Just absolutely disgusting chart. We'll talk about it. XLE down as well, and the laggard up sector is the XLP. I don't know about you. It's good to see energy down, especially under the current circumstances. And XLP, anyways, is a defensive and risk-off sector. Let's just continue to sort of creep up the list. Healthcare, defensive sector. Utilities, defensive sector, right? So it's sort of posture-wise, it's the correct posture here to be more of a risk-on rotation. And I think that we could stack that up in the bullish evidence category. Let's jump into some of these structural charts. Are the trends changing to up? Yes. I mean, this is clearly going to offer a huge potential for a higher low. There is undeniably higher highs on the table here. That's just bullish. If we look at the Mag 7 ETF, I'd say similar to the QQQ, if you had stronger sellers, you're probably mixed, and I was feeling kind of mixed on the Wednesday close, but Thursday, Friday going out to a new substantial higher high over this previous shelf of support. I mean, even if this is inverted hammer off the 50, causing a pullback to do something that looks like this, I'm just still looking for that higher low now that we've clearly seen that overhead supply is not going to be a huge issue for this. I shouldn't say be a huge issue, but rather on the first go around, we did not extend the losses back below underneath that Wednesday low, right? So for now, this is looking like a more secure opportunity to try to find the higher low, which changes the tone. Let's jump on over to the XLY. Not out of the woods on this chart yet. I'm not really a fan of the downtrend that's still persistent. Could you still get a higher low? It's possible, but I would say that this is one of the charts that still needs some work on the long side. It's nice to see it up as much as it was on the week, but structurally still have some concerns if we're underneath that 114.35. Let's look at the XLK. And here I think, it becomes obvious why I have some concerns about the XLY when we compare it to something like the XLK. I know it's basically a proxy for the Qs, so it might seem a little bit tired at this point, but if you're a seller, this is your ideal outcome. If you're a seller, you come in here, you reject the moving average stack, you get a little overshoot, right? And then you're back below. I mean, this is completely over the moving average stack in here. You're over this little left side lower high there. You're consolidating, right? So even if this pulls back, I would have to sort of be of the mindset that a higher low is the more likely thing that I'll at least be looking for, rather than, oh my goodness, markets are going to crash and burn and we're going to see like $100 in the XLK in the near term, right? So a constructive turnaround on that. XLB, a really lightweight sector, so not going to spend too much time on it, but obviously in an uptrend out of a successful inverted head and shoulders reversal. Real estate, same thing, lightweight sector, not the same in terms of the pattern, but it is at the top end of the range. Could this pull back? Sure, but as long as this isn't falling off of a cliff down here, wealth effect is what matters most as it relates to real estate. Let's jump on over to financials. A nice show of strength on the move higher into the end of the week. However, not out of the woods. I think some of the components look better than the whole. Notably JP Morgan, of course, which we'll get into. And of course, a lot of these big banks do have earnings this week. So this chart could change fairly rapidly over the next couple of sessions. I'm going to keep a very open mind here. However, I am not overly thrilled about the way that this closed on Friday. Have to give some credit to the opportunity of a higher low over the gap fill reversal, but a lot of overhead supply still in this area. This one sort of toes the line a little bit more neutral in my view. And geez, how could I have possibly screwed this up so badly? The SMH sneaking into the bottom of the list because the way that the script is written, it doesn't register that something starting with a 1 and a 0 should be at the top versus paired with the ones. Up 10.96% on the week, and perhaps the biggest indication we were posting about on Wednesday was just the idea that this made a move to all-time highs into the end of the week. This is like, how can you possibly be bearish the broad market if semiconductors, one of the most important sectors in the market right now with the AI narrative, is literally printing all-time highs, right? It's a pretty difficult argument to make. So although this could pull back, there's plenty of room now for a higher low. And you could just walk through it in the sense of like, all right, you're down here, you break down, you want to see a lower high under the neckline, right? And this was something that I was genuinely concerned about. You had left, head, right shoulders in here, a little bit of distribution for these lower highs underneath the 50 SMA. So I was definitely concerned about a lower high in here. Let's see if we could tag the 200. I was definitely concerned about, okay, as we rally into here, especially on that gap down on what would have been, what was that, Thursday of last week, right? So not in this past week, but the week prior on the shortened holiday week. That Thursday gap down, I'm thinking to myself, oh my goodness, here we go. It's rejecting the moving averages. We're under the overhead supply. So to rally back in there, we started to change our tone in last weekend's episode, right? And you go back, grab the timestamp if you want. I said that the SMH would be one of the largest risks to the bear case. And boy, oh boy, was that ultimately the case. So the fact that this has recovered so substantially to all-time highs is a huge bit of the supporting evidence that, in my opinion, confirms more of the opportunity for a lockout rally versus, oh my goodness, we're going to crash and burn and go to zero, right? All you have to do once again is look back here to the situation in May when we got the gap up, reclaim the 200, sideways for a couple of weeks, off to the races. You never looked back in the SMH. So I'm not saying it has to be the exact same, but boy, oh boy, nice consolidation, sideways, failure to go lower. What do they say? From failed moves come fast moves, right? So there's your failure to go lower. We've already made a fast start to this move. Any higher lows, any consolidation above this prior left side peak at about 418.40. Let's see if we can get some continuation. So again, chase it long here, not my favorite, but if we could close this gap below, look below and fail and then go. If we could go all the way here, look below and fail on the gap, I'm sort of very interested in those opportunities for the SMH. Let's jump on over to communications. Nice improvement here, liking the consolidation into the end of the week over the previous left side lows at 113.25. This is a helping hand for the market. Noting how aggressive this sell was in here, the fact that you could not see a more substantial lower high under the 20, in my view, a notable improvement. Let's jump on over to utilities. This is a defensive and lightweight sector, so I'm not going to give a ton of credit to this saying like, oh, wow, this looks bullish. I mean, in a vacuum, yeah, sure. You could start calling this a little bit of a cup and handle, but, we don't want utilities leading, and they actually started to back off a little bit into the end of the week. Let's take a look at the XLV. Defensive sector, it's still semi-heavyweight for the market. Not overly heavyweight, but it is up there. It's like midway. So to see this rejecting the 150.25, not in love, I'm going to start maybe trying to give it the benefit of the doubt for a daily higher low attempt in here. If this fails, I would become a little bit more concerned. One of the things that I have in the back pocket, this is not in, XBI, did that stick? I think it did. If I could, there we go. One of the things in the back pocket is just that the XBI has looked phenomenal up here, right? So different segments of healthcare look okay. Biotech in particular, which in my view always represents a little bit more risk on, noting the just drug discovery costs in there. This doesn't look bad to me, right? It's more of those insurance providers, which got a little bit of a bump on the Medicaid thing. You could see the UNH gap before the market actually gapped, but that's the point, right? Notice that this is on the headline, and then when the market gaps up on Wednesday, UNH actually does nothing and rejects the daily 200 SMA. So that's a little bit more problematic, right? So see the difference there between XLV and the XBI? I think that's notable. As we look to the XLP, this is defensive, this is risk off, this is consumer staples. I don't really mind this rejecting in here. Is it still a bear flag? Probably. I would not be bullish on this particular chart. Let's take a look at software, another one that I would absolutely not be bullish on. I am just continuing to be a little bit impressed by the nature of the way that the volume continues to churn in this. After the volume, and I know I might sound like a broken record here as well, after the volume churn that we saw over here, I was thinking that, okay, maybe we've situated a little bit of a low, a longer standing low in the market, but just continuing to see that narrative proven wrong with the amount of selling pressure we've seen here over the last 3 trading days. So I'm not necessarily sure if it's the private credit issue. I'm not necessarily sure whether or not it's the agentic AI narrative. I don't know exactly what it is, and it doesn't matter what it is. All I'm seeing is that you should probably not be touching this with a 10-foot pole, considering that this was unsuccessful in finding a higher low over the 20 for inverted head and shoulders. You've blown out to a new low on increasing volume when the broad market is making strides in the upward direction. So why would we try to find a bottom in something that is an egregious weekly downtrend? I mean, look at this thing starting to blow out underneath these lows. So I've got some reservations about software. Don't love it. Let's continue along. Let's take a look at energy. Back to a daily chart. With crude coming down, of course, we should expect energy to maybe soften up here a little bit. I still am a believer that crude is going to settle into a notably higher price range than where we were from like unchanged through this entire conflict. So that's something. I think that if anything, you want to be a buyer here against the 50 with very tight risk, right? So you could be looking for like a risk reward along these lines, retargeting the daily 20, and ideally runners balloon you back up to the all-time high. I also think if crude's going to pull back but still find that, higher price point, you could just go sideways here for a while in the XLE, and that would be fine, right? This has had a very impressive run. I mean, how many percentages is this up from this, let's just say the pullback low there, to the high? I mean, a 41% rally in the XLE. It's very impressive stuff. To just digest here and go sideways would not be all that unreasonable. So speaking of crude, let's actually take a look at that because there's an important story to continue telling as it relates to the price of crude. Let's just make sure our futures adjust for contract changes is on. Perfect. And what do we see here? So on the Wednesday, or it's the Tuesday night overnight tweet. It was a Truth Social post, right? Hey, we're going to have the ceasefire. We actually moved back down underneath the original Monday ceasefire price, which is a good thing. Now, what I would particularly like to see here is over the span of the upcoming week, can we actually make strides towards the lows of that original 5-day ceasefire announcement? That would be closer to 84.30. Now, another reason that I'm actually a little bit more bullish the market is if we look at BZ, which is Brent crude, the more globally priced crude, notice how much lower it went. It did go to those lows, right? Around $90 a barrel. So if this is just going to be a substantial lower high in here, then great. Not to say again that crude is going to go all the way to the unaffected price back down at like $60, $62, but if we could start hanging out $75, $80 somewhere in here and find that as the new floor, perhaps this pullback low, it's right around about $77 to $80 a barrel. If we can make a move in that direction, that certainly starts to ease some of the pressure. Why do I not think we're going all the way down to the unaffected price? Shipping insurance, like the insurance premiums themselves through the Strait of Hormuz is, even when quote unquote war insurance goes away, the premium to send anything through the Strait is just forever going to be higher based on what we just experienced. So, does that mean we stay at 90? Does it mean we go to 80? All I do know is that it would seem incredibly unlikely to me that we do head all the way back down to 60, 65, right? So that's the main takeaway. But again, one of the bullish data points that does support, in my view, the idea that this market is on a road to recovery. It's just that the Brent price did make that 100% retracement. So that is the sector watch alongside crude. Let's take a look through the ratios for our sectors. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. This has improved, right? From what had started to look like, okay, maybe you're hanging on there, and then whoa, heads up, to suddenly like, no, that's actually technically a higher high right around in there. So that's an improvement. As we take a look at this is not great, but headed into earnings season could rapidly change. Not great over here. I like the fact that this is starting to curl up. What I like most is that staples not outperforming. You can see utilities also coming in a little bit. More impressively, if we take a look at the specialized ratios, let's go over here. What do we see? Substantial recovery over here. This is a very dangerous ratio because this basically compares tech to cash, right? So to see that breaking down like that, that's like, oh my God, you mean to tell me that dollars have a better forward-looking return right now versus tech? That's insane, right? So to see this recovering meaningfully is a big deal in my view. I love the fact that this is coming into the 50. I'd like to see it break. This huge breakout with semiconductor strength. That makes obvious sense. And you're even curling through the 50 SMA on apples to apples staples versus discretionary. There we go. I would love to see it if Cathie Woods could get her act together and sort of get the ratio turning back in the upward direction. Not there yet. And I would also like to see this break the 50 SMA as well. That is your Russell 1000 growth and value. Let's jump on into the B set and see what we've got going on over here. Neutralizing on the gold ratio, that's great. I'd love to see Bitcoin start performing a little bit better. We are still on a bullish trigger from the Sailor Shift tool that never really went away as we've consolidated. So if we could break out of the range, I would expect higher on Bitcoin, and that would act as an improvement to risk appetite. Really love this ratio pushing back higher as well. It means that the S&P is outperforming the long bond as of right now, which as we know is a little bit more defensive when it's inverted. So liking the improvements across the supporting evidence, we are seeing the green shoots. And once again, I don't think it's worth maintaining an overly bearish stance. As we look at the dollar, it's certainly not breaking out. It's backed off for the right reasons. We could see that the TNX, the 10-year interest rate, is coming down. You could still consider this a flag. And if we stay over 4.2, not great. I would ideally like to see this back down towards 4%, honestly. But as of now, steps in the right direction are kind of what matter most. I certainly would be mindful of a higher low. Again, if this does turn into a bull flag and it does start to ramp back higher, if the dollar starts to pressure that $100.50 mark, I'm going to have to sort of maybe start reevaluating some of the data points if others start to turn as well, notably some of those ratios that we were just looking at. Let's jump from the dollar over to the inverted ZT, which is basically the Fed watch tool. Still expecting higher for longer, as we know. Let's jump over here and take a look at the Fed watch. A little bit of a reset. Let's hit the probabilities tab. So no surprise to see higher for longer from that perspective, but the aggregated odds give us a little bit of a more optimistic look for about June of 2027, not 2026, 2027 for that first Fed rate cut. So why might that be the case? As we know, we got the CPI inflation data on the Friday session. I'm actually going to use this calendar. And you could see, as we covered sort of in the intro, that inflation, although it ticked up, is generally in a downtrend. And for that reason, if we can look through this energy shock, I would expect that the market doesn't freak out too much as it relates to rates. We've seen the worst of it. And as long as we can digest, once again, a Brent crude price and a CL that continue to move back down to the Monday's original ceasefire lows and through those lows, we're probably in the right direction as it relates to inflation. We'll see what the PPI looks like. Obviously, there will be ripple effects here, so it's not like it's going to go away over the span of one or two reports. But if we can keep things tame, then generally, as we know, we could just open up. Let's go to the core year over year, and then let me break this out to a 5-year. Obviously, this, although we got an uptick to a 2.6, it's dramatically different than September of 22 with a 6.6 on core inflation, outside of volatile food and energy. So that is a constructive look as we look forward to the next week's worth of data. It's pretty quiet. The PPI is, once again, probably the biggest thing to pay attention to. A lot of Fed speak in here, and that's really it, right? A lot of Fed speak, and the PPI on Tuesday is the main event. Let's go on over to the earnings calendar. As we could see here, a lot of reloads in the background. Not a fan of that. Let's take a look. There we go. Big earnings week. We kick it back off with financials. So there it is. Goldman Sachs, JP Morgan Chase. Let's use boxes. Goldman, JPM, Citi, Wells Fargo, and then of course we have Morgan Stanley, Bank of America, then over here Charles Schwab. That's good there. And then for semiconductors, let's please pay attention to ASML. Huge opportunity there. Let's pay attention to TSM. Huge opportunity there. And of course, Netflix, the first of what we used to call the Fangman companies, right? Those guys been disbanded a little bit for the Mag 7. Netflix no longer being a part of that, but Netflix actually looks pretty darn good on the daily chart. So those are the major watches that I've got headed into the first major week of the earnings season. We'll see where we start to land, and financials will be the first shoe to drop as it relates to the sectors that tell us push-pull. Should we trust this? Should we not? Let's jump on over into our, let's grab, supporting evidence, starting with the bond relationships. As I lose my voice for the second half of the video, you can see here that the ratio is not breaking out. As long as that's the case, inflation expectations are going to come in capped. Let's jump on into the credit spread chart. You can see that we've broken down meaningfully on the bottom chart here, which is the one that we watch more closely. Any lower highs under the 50 would be really compelling for a more risk-on look in the market, which is great. Let's take a look at the HYG in isolation. You could already start to see how it's pulling back, and once again, would just be an indication that the risk-reward profile at the highs, the highest high of the S&P, don't necessarily make the best sense. You could see how from this low here, you've got a lower low versus this higher low right there. So expect a little bit of a pullback early on in the week. Certainly makes sense to me based on the HYG. Doesn't mean we're overly bearish. Just means in the short term, you might have gotten a little bit ahead of yourself on the S&P overall. Let's hit this with maximized pains here. There we go. We've got the new highs versus lows remaining positive. We want to see that continue to remain positive. That would be fantastic. I ideally want to see higher low hooks over here and this stay over the 50% mark. This can higher low under the 50%, and then we really would like to see it reclaim in short order. That would be the most aggressive outcome here as we compare back to remembering back to May of 2025. Right in there is when we get the gap up. See this big upshoot there. If we can get that to stick over the 50, that would be fantastic. So you could pull back here, but ideally you start getting above that in very short order. Let's jump forward to the RSP. Looks absolutely phenomenal on the gap up, like the market, not rejecting any of the overhead supply. You can see if I draw a line here, even if you close the gap, if you could get back above that, you're probably in good shape as long as you stay over this previous left side as well. I'd be a little bit more optimistic for the higher low. That's 192 RSP. If you look at the QQQE, same story as the basically weighted QQQ, where we've reclaimed this area a little bit weaker into the end of the week. So just calling out that breadth. It's showing green shoots, but it's maybe not the most impressive that it could be. That's okay, right? We've seen a substantial gap up. It's not like everything is just going to just go gap and go everything to the upside. There's going to be a little bit more of that blend as we find new winners and new losers throughout the big major indices, right? Let's go from breadth over to our volatility complex, which, as we know, is also a huge supporting evidence factor. This gap down here is very similar to the gap down here, and that, of course, is that same May gap, deal to make a deal. And as long as we're underneath the 20 handle, trend is broken. We're moving in the right direction. If you look at VVIX, let's just throw VVIX down here. You could see that we are also moving in the downward direction, breaking trend there. It actually broke lower first before Wednesday, right? If I zoom in here a little bit, see how this is already substantially lower under the 120 handle in here. That was before we broke back down under 2050 on the VIX itself. Let's jump into the vol futures, and what we could see is a huge push straight back into contango. Whenever we go from vol inversion, or what we call backwardation, back to contango, that's generally a sign that, okay, everybody can come out from hiding and let's just sort of make a move in the upward direction. Let's start putting money back to work in markets. You can see the same thing here in the 9 versus 30 day, and the 1-day VIX also printed a new low, right? Relative to this entire conflict, that is the lowest low that the 1-day VIX has been. So yeah, it closed high here. That's typical headed into a weekend. Obviously, this thing does not tend to trend down. You get increasing volatility through the overnight session, or at least the unknown of the overnight session, and then it sort of opens lower the next day. Nonetheless, volatility complex, in my view, is a little bit more favorable for some sort of sustained movement in the upward direction. Let's finally hit it with skew. This is, I've got to fix this. Let's just get rid of these vertical lines for a second. Just focus on the upper chart. Skew just remaining sideways, right? And basically what that tells me is nobody's reaching for really long dated puts on the counter trend rally and saying, hey, I believe that this market's going to crash and burn. We've got another black swan on the horizon. If so, we'd be up here at 170, and that's just not the case. And while we've got a line chart, let's just hit it with the P call as well. And as we know, markets typically do not like to reward when everybody's loaded with puts, that insurance. And that's exactly where the market sort of found a little bit of that bottom, headed into the end of the week, this sort of reset. And, we'll continue to watch for that one read. But for now, kind of telling us everything is okay. Back to the normalcy of what we have in here. Let's move from P call, and let's even just do this. I'm realizing that's a weekly chart, but you can see the same thing. It's, I've been tracking this intra-week as well. There's your sort of lower highs up against the one handle and then lower into the end of the week as put premium comes out of the system. All right, there it is, just to be thorough in the investigation. Let's hit the core list of companies, and then I've got a huge watch list of names to share with you. As you know, it's going to be the same one, but just a rehashing of the Wednesday watch list, and we'll see what's still good, what needs improvement, where some setups are. NVIDIA, I've got to give credit where credit is due. Reclaim of the moving average stack, fine. Still inside this range. I don't know that I'm fully on board, oh my God, all-time highs. I'd be sort of open-minded to a rejection, and if we pull back and remain constructive, build out some more right-hand side and then go, that's a possibility. I think NVIDIA had been priced to perfection. I still think it is priced to perfection. I don't know how much more upside is in this thing. I'm not going to argue with price. Obviously, if you're in it long as a trade, fantastic. Great. Obviously, it's breaking out. But, is it going to go on for another 300% rally like it has in the past? I don't know. I think that pricing has sort of happened already. So mostly reevaluating at 193.25. Don't really want to chase longs up here. If we take a look at the hourly chart, I would think that this could be a short early in the week, thin structure retracement, especially if the broad market pulls back, then reevaluate 184.25. Let's jump on over to Apple. I think this chart looks great. I'd love to see just some consolidation and then ultimately this to work itself back in the upward direction. Apple has sort of maintained itself as a value play in technology. So, I'll see if that remains the case. And over the 50, I think you just start to treat this as a range rotation, right? Hold of the 200 SMA, range rotation back up towards the highs. Let's jump on over to Microsoft, a little bit toxic with the software narrative that we've been talking about. Rejecting underneath the 20. Sort of hands off on this one. If it was going to be a little bit more constructive, I would have thought that the rally early in the session on Friday should have stuck. Right? This rally should have stuck. We should have started battling against the 20 and then retracing the thin structure that we have overhead. So I don't think Microsoft's going to zero like some other software that doesn't really have moat, but your Azure is going to keep this thing afloat. That's worth something, of course, as a hyperscaler. So you're not going to go to zero here in Microsoft, but is it my favorite long? Not necessarily. The chart structure is still in a bear flag technically down here. Let's keep moving over to Amazon. This, on the other hand, I've been a little vocal about the Amazon-ness and how much I like Amazon. I think it's a winner of robotics. I think that it potentially plays a role in just like the future of obviously logistics, everything that they've done with the networking that they've got in place. So nonetheless, hyperscaler, robotics, all of that, I think it's a big winner of the entire AI narrative, and the market seems to agree at this point, reclaiming the daily 200. This is sort of breaking out of a base down here. Now, are you a new buyer there? I'm not. If this pulls back and can show a daily higher low setup and continue to ebb and flow in the upward direction, that's fantastic. Probably not chasing it, though, as of Friday's close. Need a new setup here, some kind of a gap fill reversal, some kind of a gap and then fade the thin structure, 200 SMA retest, something like that. Need something new, but very interested in this on the long side. Clearly a new market leader. Let's jump on over to Google, or I should say of the mega caps. It's emerging as a leader. We've got Google doing very similar, never even came close to the 200 down here, probably the best relative strength through the Mag 7 complex. Really awesome action on Thursday, looking into some of the gap, closing a little bit more and then closing back at the highs. I'd love to see sideways over this left side high and then continuation in the upward direction. If we do close the gap, 50 SMA look below and fail would also be interesting there. Where do I become concerned about this? If this is here and pinned by the 50 doing something like that, probably concerned on breaks back down underneath 296, re-triggering the head and shoulders neckline. Let's jump on over to Broadcom, another one, probably more similar to the Amazon chart, but huge upside there. A big winner as it relates to the TPU processes and that not TPC, TPU, and that Anthropic contract that just went through. So big breakout over a daily pivot in here. Looks good to me. And as of now, any daily higher lows over this level, really nice. Potentially looking for this gap close above. That's 382 to 394 off of 353 on a potential pullback. If we go deeper than that, not the worst thing in the world. I would certainly respect the ability for look above and fail, but probably playing into this as a daily higher low setup over this gap close area and an upward sloping daily 200 SMA. Let's move on over to the metaverse. This one's not my favorite. This is probably actually a better short watch. A rejection of the 50 SMA. If we crack the 2-day lows, I think we're lower towards the 20 into the early stages of this week. So I'm watching as long as we don't go higher than 637.20, rejecting this left side over here. If we start to take out the 2-day lows, and I will go to the hourly chart for this meta, you could call this double top under the neckline, triggers the short. You're here and here, then reevaluating at the 20 and some potential interaction off of the gap. Let's take a look over at the Teslaverse. little frustrated with this one on Friday, but maybe the Stevie Wonder does come out to play here into this 366 level. If you take a look in the hourly chart, it failed to really make that meaningful move. It started to go look above and fail for the short, but closed a little bit stronger than I would have thought. So nonetheless, if this is going to be a subtle little hourly higher low, do you get a pivot break up into this thin structure retracement? Probably. And then in here, I would start thinking about your lower high opportunity. This thing is not showing any signs of new market leadership. This remains in a downtrend. It remains really weak down here. I wouldn't put it in the same bucket as a Palantir, but my God, this is not something that I would be overly, jazzed up about in terms of getting new longs on, in terms of swing positions or just like optimistic about it for a return back to all-time highs. So when and if it can change its daily trend, we'll start talking about it a little bit more constructively, but it's just not there yet. Let's take a look at JP Morgan. Nice 3-day balance range, earnings early in the week, so we'll sort of leave that be. Sideways to higher, bullish for the broad market. Sideways to lower, but gap fill reversal. Still bullish for the broad market. If we do start to accept back underneath 290, 250, like let's say we get a big gap down to here and then fail, that would be problematic. I would say that losing the XLF would not be a helping hand for the S&P. Let's jump on into Palantir. The damage has been done. You've got a bit of a pin bar hammer on the Friday session. Could it go counter trend higher? It could be, but I would not be trying to catch a falling knife over in Palantir. It's to me, it sort of has this big distribution up here. This is a big weekly and even monthly lower high underneath the daily 200. It looks weak to me. So again, could you go counter trend here? Sure. But why? Like, I would rather focus on a new name, either outside the core list of companies, hint, or something that is just completely an additional idea, something with real relative strength, than just trying to force your way into a, old leader, which has gone backside and is now just maybe going to slump off for, a while and do nothing before maybe some new story changes the underlying fundamentals. But it's just not what we have right now. So sure, let's go down to the hourly chart. If you think it goes counter trend, that's great. I would be waiting for it lower high here as a short, 136, something like that, and possibly some downside to play there. Right. So I would really focus on Palantir as extreme relative weakness. And where is the short? Right. It needs a counter trend move to set it up. But where is there a short at 136? Where is there a short at a downward sloping daily 50 SMA? Let's go on over to AMD. Semiconductors on fire. SMH out to new all-time highs. Big uptrend here. Any pullbacks go. Right, where's the daily higher low setup? Ideally, it's anywhere over the 218.85. I'd love to see like partial gap, or not partial, but full gap fill reversal here. Build out like a daily flag, perhaps. And then we're out of the flag to go back to all-time highs. If it's a sharper reversal and the market has some more turmoil, if we could do something like looks like this up against this gap, that's great. 222.15, 218.85. As long as this stays over the moving average complex, as long as we're looking at a weekly and daily higher low, that's fantastic. Down here, I was a little bit more optimistic, or at least open-minded to the idea of an OpenAI gap test, and that very well will be in play at some point in the future should we find weakness in price action. But for now, can't argue with price back on the hunt for a higher low and the uptrend. Let's take a look at the new addition to the core list of companies. The Squawk members voted on MU versus TSM, and we'll continue to watch this. But Robinhood just is no longer it, right? Robinhood needed to be retired. Maybe when and if crypto gets exciting again, Robinhood gets exciting again, but it's been trading absolutely awfully. And I think that MU deserves a rightful spot on this list, especially with the memory complex being a huge leadership theme in the market recently. So nice holds over the daily 50, daily 20, sideways consolidation, really a bullish 3-bar play on the Friday session. If we go out over the highs, there's probably a scalp over 423 to 440. Would I like to see another look below and fail on the gap to get positioned long? Yeah, that would be the best outcome. Or something that looks like this is a decent outcome as well. As long as they're over this 368, I think we play catch up to something like a SanDisk and the rest of the memory names, which went out to new record highs here alongside a WDC, right, alongside an STX. All these guys out to new highs, and MU is saying, hey, what about me? Right, so MU a little bit more optionable than those others, although the spreads here tend to be a little bit wide. This is certainly something that we will have on the core list from here on out. That's that. Let's go ahead and hit this now with the additional ideas list. This is a big list with many, many names. And we're just going to cycle through them fairly quickly and just say, is there something to do here or not? PLAB, I would say daily high or low, somewhere up against the gap level. Let's go ahead and grab the correct tool there. Something up against this 42.30, the top edge of the gap. If we could get a pullback sort of daily higher low over the 20. Maybe there's something to do on a P-Lab. Let's go on over to TSM. This was the other contender for the core list. You can see I have my alert. Same thing. Needs to do something with the gap, set a higher low. As long as we're over the 50, I'd be constructive for upside. Please be aware of some of these names. We're headed into earnings season. Make sure you understand when earnings are for the names that you potentially are interested in and or own. Let's jump on over to ENS. Needs something with the gap, but very clear inverted head and shoulders at the highs. If this could close the gap and set up some more right side in here as a consolidation box, maybe it's over the flat top as a break point. There we go. There's a straight edge. Let's go on over to VSAT. And by the way, I may, let me say it this way. I may have long positions in any of these names that are on the list. So do with that information what you will. I am not going to go through every single one of them, but just blanket statement. Imagine I have a long position in almost all of these names as a swing, okay? VSAT, nice hammer there, look below and fail, previous day's low. As long as it's over 52, looks good to me, possibly even buyable up and over the Friday high of day as a higher low setup with relative strength to the broad market, breaking out of this range in here. Let's go on over to PWR. Same idea, possible consolidation in here, buyable out of an inside day on Friday over those highs. HUT needs a pullback. HUT 8 mining, if we could get a pullback in this neighborhood there, 62.1060, I would love to see if we can get some kind of a rotation for a higher low. The gap is a little bit too much of a pullback at this point. I'd prefer the higher low remaining unfilled, or I'd prefer the gap unfilled and a higher low here to set up the best strength. NBIS, another one, new all-time highs, very clear left side peak that higher lows can exist above. If we pull back over this 134.50, is there a way to get involved on something like that? CCJ didn't really have the best follow-up on Friday, but it did reclaim the 50 SMA. Uranium was a top group on that gap and go from Wednesday. If we could get higher lows in here, I would be interested in possible follow-through out of this, or at least watching it as a bull flag and trying to find our way into a higher low setup at some point. I don't know that this is the cleanest yet, but it's in that neighborhood. TESM, Tower Semiconductor, one of the newer market leaders here with a ton of volume accumulation back here. This is getting a little bit quiet as we go sideways for a few days on the Wednesday gap up. If we break these lows, I'd like to see a pullback and some sort of a higher low up against the 20 perhaps as a follow-through move. Let's go into Powell. Gap and go, inside bar there, probably buyable for a momentum style play, post-split euphoria. Look at the volume coming into this. Again, like, do you want to be long at the tippity top? Please understand that, like, this is not buy this here and hold on to it if it pulls back all the way here. It's like you buy it over that high with a stop underneath maybe the inside bar low. Maybe if you could find it, the stop could be underneath that current day's low, right? Something along those lines. But inside bar breakout on Powell doesn't look half bad. Let's take a look at Wolf Speed. TerraWolf. Nice inverted hammer. I'm looking for the pullback on this one early this week. I would prefer to own this from somewhere around 17 on a pullback that remains over the breakout point in here. Great volume as it made that extension higher. Intel, another just absolute monster. If this can pull back and set a higher low, fantastic. Looking for something closer to about 54.50 prior left side and or the full gap close and prior shelf 51.30. We're moving fast. BE, I've owned this one for a while, so it's kind of been a little bit of a dog for me, but still involved in this and acting well. I don't think I'm going to add to it personally, and this one just comes to mind because I know I've mentioned this one on the channel in the past. So over the highs would be great as a breakout, and then we'll see what we do with it as we approach 200 TBD. CLS, an old one that is back on the radar here on a substantial move back to the top of this flat range. So again, probably not buying this up against the resistance, but if we could pull back, set a daily higher low, and then get involved before the break, that would be better, right? Buying pullbacks in this market has been way better, at least more recently. That could change now that we have a more euphoric and optimistic bull market, or the early stages of one. That could change. We could start being able to buy breakouts here, but CLS would prefer something on the gap, especially coming from what we call wall-to-wall. Form, nice gap and go, break, and just higher here. No doubt about that. Looking for a higher low up against the breakout point, 108. Next in the cycle. Teradyne, same thing. Needs a pullback in here, something around 326 for a higher low. Marvel, this is the D-strat, as we called it in the chat on Friday. You just got to buy it. Marvel is just, it's going parabolic in here. Not fully parabolic, but you get the idea. And that was sarcasm that you just got to buy it. Still looking for a risk-friendly entry on this Marvel, but for now, it's just acting as a clear leader in the semiconductor space. ANET starting to get in gear here on a trendline break. The moving average cradle is nicely stacked underneath us. Let's see if we can get something to do over here. I'm a little bit less thrilled about this one. I might even be less likely to put that one on if it does set something up. KLAC, nice. And, obviously all this stuff, or a lot of it, I should say, is in the same group. So you could pick your poison in terms of which one you like best. KLAC on a pullback over the low cheat and a gap fill at 1580 roughly. AMAT, another one, same idea. Needs a little bit of a pullback in here, testing the gap, look below and fail would be interesting, 377.25. MU we already covered, so let's keep going. ASML, same as a KLAC basically, but something in here, right, for the gap fill reversal. Keep in mind earnings on all of these names one more time as a reminder. VRT really strong, which makes me think, I don't think I have MOD on the list. Yeah, maybe we'll take a look at that last, but VRT probably needs something over that 275.30 spot. If we could get something there, interested in that. And notice something similar on all these charts. We're not buying charts that look like Nike, right? Look at Nike, for example. We're not trying to buy, oh, look, the market's turning and we're going to get this thing on sale. We're looking to get involved, or, I'll speak for myself. I'm looking to get involved in the names that have already been proving the most relative strength, right? And by the way, if you know any names that are in like really nice bases that are not technically at highs, that would be interesting. I'm still looking out for those names to start emerging, but haven't found them yet. Not that I'm, if you want to share, feel free to share in the comments, but you don't have to. Q, can we get a pullback over the low cheat, right? Call this a double bottom, whatever, right in there, 121.25. Flex, another one. This is the IBD guys, I think, are already involved in this, but straight up and looking for the higher low anywhere over the 72.10. Let's jump into Fly. Really beautiful looking chart here. This is probably the closest thing to a low base that could become a very dominant chart. Look at the volume coming into this thing post earnings. I would love to see a pullback, hence the alerts in here, and really get positioned up against that 32.15. Call it like a weekly double bottom. Really interested in that chart. Caterpillar, as the AI data center build out maybe comes back into focus for the market and we start focusing less on the war, something to talk about over here, right? It's obviously offered some relative strength. Something over this 776.50 area would be great. Keys, another one, just relative strength out of this range. Some kind of a higher low over the left side and or the gap location would be great. Let's talk about Lattice. A little bit of relative weakness on the Friday compared to some other semis, but some undercut and sort of move back higher, look below and fail in the gap range right around 100, the psychological number. Fantastic, right? Something like that looks great. Let's take a look at Dell. Gap fill reversal in here is still interesting, right around that 178.25. So looking to see if we could turn out of this and or make a move to the 20 and then get continuation anyhow. Let's jump into Rocket Lab. Swatted down by the daily 50. I'd be curious to see whether or not the Artemis splashdown acts as a little bit of a catalyst there. Shout out to Djibouti on that one as well. Let's see if we can get some kind of a turn here on a higher low over the 200. That's the next watch. Rocket Lab may not be the strongest, and some of these other satellite companies, which are towards the bottom end of the list, could be better. XBI, which we've talked about already, looks good in here for a potential higher low over the left side. If we look at XOM, maybe something to do off the 50. It's starting to act a little bit weak with crude down a bit, of course, so just be very closely monitoring CL if you're interested in that one. GSAT, nice consolidation up here. Let's see if we can go sideways and break through that high volume close. That would be the most telling, or look below and fail on this very flat set of lows around about 71.75. That works for me as a potential level. PL, what do we have on this? Something along these lines gets interesting. PL probably a little bit stronger than the Rocket Lab, noting its position on the daily chart. SATs, same story as the other, VSAT, GSAT, SATs here. Higher low cup and handle. Can we break and just move through the pivot at 131.25? Time will tell. And then finally, Lunar. And perhaps we're going to add MOD. I got to look at MOD, and there's one more that comes to mind. Lunar, very similar to the SATs companies. There you go. Some kind of a look below and fail on 22, back up through this 24.10, and you're starting to talk about blue sky territory there. All right, so that's that. I also have MOD in the back pocket. MOD probably hits the list just to be a sort of watch alongside. VRT looks good inside bar there. And then I'm also FTAI. I saw an article recently about turbines powering data centers. So doesn't really look great. Maybe gap fill reversal on Friday could be it, but this one needs a little bit more work. Notice that it's not quite perfect at the moving averages. So we'll keep that one in the back pocket. If it starts to play nicely, then perhaps it's more of a top watch. So that's a ton of stuff. Feel free to, add a watch list of all or none of those to your lists. And with that, we'll wrap up today's episode and installation of the weekly watch list. So enjoy the rest of your weekends. It's blue and sunny. It's blue and sunny skies here, and we're looking to enjoy that as we start to spring into the summer. So hopefully you could do the same. As always, we'll be live on Monday morning at 8 a.m. Eastern time here on the channel for another episode and installation of the pre-market prep. If you learned anything new or enjoyed the episode today, feel free to let me know down below in the comment section or by giving the video a very simple thumbs up. As always, stay green this week, and I will see you in the next one.